That's what the Forex character looks like. We have another one here, which is leverage. Forex trading allows traders to control larger positions. That's what leverage is about. Being able to control larger positions. So you're coming into the market with $5, but with $5 you're not supposed to be trading. But your broker provides you positions that gives you larger positions, larger equity, larger money for you to be able to trade. It's reading here, it says Forex trading allows traders to control larger positions with smaller capital through leverage, meaning you can amplify both your profits and your risk. It says it is decentralized because of the OTC, the over-the-counter operations. Now, being decentralized is not like the crypto. You might be wondering, what does it mean being decentralized? Decentralized in the fact that you can actually trade it outside the counter. That's what it means by being decentralized. Now, it's not decentralized like saying you can now trade euro, like only you. Hi everyone, welcome to this episode of our podcast on the basic trading foundation, the trading teaching series. In this particular episode, I'm still going to be talking to you on the basics of trading and understanding trading. Understanding Forex and crypto trading with CFDs, stocks, and the rest of them. So right now, I'm going to just go straight to my book. I've told you want to get this book, go straight to kfctrading.com and you're going to have access to this book. And this beautiful book will help your psychology, will help your trading career, trading mindset, and you're going to be a better trader if you were a trader already. But if you're looking at becoming a trader, this will help you to start up with a better foundation and get good amplitudes and momentum to become the best that you can ever become. This book is just as cheap as let me stop saying the word cheap. Is as affordable as $10. It's supposed to be $20, but we're currently running 50% discount on our store, kfctrading.com store, and that's why you can get it for $10. Make sure you get there right now and get this book for yourself. Quickly, I'm turning on to the book, and where we stopped in the last episode is we started by talking on understanding Forex and crypto markets. As I said a few things about the Forex market and a few things about the crypto market, but for today, it's still on that. I'm going to take Forex first of all as a case study, say a few things about Forex, show you a few of its key characteristics, then I'm going to move into crypto from my next episode. So on Forex, I'm going to read this article. The Forex, which is foreign exchange market, is the largest and the most liquid financial markets globally, with daily trading volume of over $6 trillion. Unlike traditional stock exchanges, Forex is a decentralized market, meaning it operates over the counter OTC without a central exchange. This allows Forex to be accessible 24 hours a day, 5 days a week across multiple time zones, making it a favorite among both individuals and institutional traders. So you see, it is the biggest, like we always let you know, it's the largest, and the estimate is $6 trillion. Wow, just to think of the figure keeps me excited. $6 trillion. I don't want 6 trillion immediately, but if I'm in a market of $6 trillion, I'm looking forward to how I can get, even if it is 1 trillion out of the 6 trillion. What do you think? That alone is enough for me, and that's why I'm a trader. That's why you should be a trader. A market of 6 trillion, that means there's money in the market. All you need to do is you get on board, get into the trading system, learn. Join kfctrading.com academy, and we will teach you how to be relevant in this market and how to make money in this market. It says it is decentralized because of the OTC, the over-the-counter operations. Now, being decentralized is not like the crypto. You might be wondering, what does it mean being decentralized? Decentralized in the fact that you can actually trade it outside the counter. That's what it means by being decentralized. Now, it's not decentralized like saying you can now trade euro, like only euro outside the bank. If you want to get euro, you have to still go back into the bank for that. But when it comes to forex, which is foreign exchange, you can trade a certain country's currency with another country's currency even outside the bank. So that's what makes it decentralized, over the counter, and you can trade it with individuals who want to exchange with you, and that's exactly is still what forex is. Okay, that makes forex decentralized. Okay, but when it comes to crypto, you see that when we say crypto is decentralized, we mean that the crypto works without the bank. So when we say decentralized, we mean it is decentralized from the bank. But forex, that's the foreign exchange market, is also decentralized, but not that the currencies are not being operated by the bank. It just only says that the foreign exchange means can actually be done even without the bank or in the bank. Like in some countries, like in Nigeria, there's certain places you can go change money, and it's not necessarily a bank. That makes it decentralized. So quickly, I'll say a few things about the characteristics. The rest of all, as you can read through, we have the first thing here: currency pairs. Forex trading, let's read this. Forex trading involves the buying and selling of currency pairs such as Euro USD or GBP JPY, which is the Great Britain pounds against the Japanese yen, or that's Euro USD, which is the Euro US against the US dollar. Traders speculate on the price movements between these two currencies, and that's what currency pairs are. That's what the forex character looks like. We have another one here, which is leverage. Forex trading allows traders to control larger position. That's what leverage is about, being able to control larger positions. So you're coming into the market with $5, but with $5 you're not supposed to be trading, but your broker provides you positions that gives you larger positions, okay, larger equity, larger money for you to be able to trade. It's reading here, it says forex trading allows traders to control larger positions with smaller capital through leverage, meaning you can amplify both your profits and your risk. Did you see that? So these are just a few things that are terminologies that you should get used to when you are dealing with forex. Let's look at one more: liquidity. Let's read this. The high volume of traders ensures a high level of liquidity, allowing traders to enter and exit trades at their desired prices quickly and efficiently. The high volume of trades, when you talk about liquidity, you're talking about money. The high volume of trade, it talks about the entries, it talks about the exits. So when you find where most traders are getting in the market, it is liquidity. Where most traders are exiting the market, it is liquidity. The place where you find most volume, most orders, most trades is liquidities. Then we have market hour. Let's read the short article here. The forex market operates 24 hours a day, 5 days a week across different trading sessions, including the Asian, European and North American sessions. This provides flexibility for traders to trade anytime. Did you see that? It operates 24 hours a day, 5 days a week across different trading sessions. So there are different trading sessions. Take note of them in case you are new and you don't know. We have the Asian trading session, number 1. Number 2, we have the European trading session. The number 3, we have the North American trading session. So we have Asian, we have London, we have US, or the New York trading session. So for us in KFC trading, we trade Asian, depending on the pair we're trading. We trade the European, so we have London session, which is usually in the morning. Asian is usually 1 a.m. okay, give and take, it opens 1 a.m. GMT plus 1. The London opens 7 a.m. GMT plus 1. And then we have the UK, which is the New York session. Sorry, I said UK, New York, I mean New York session, which opens 2 p.m. GMT plus 1. This helps traders to be able to maximize flexibility. So you know, okay, I'm trading sessions, so, or rather during the trading sessions, these are the market hours, the major moves. So I'm going to be coming up maybe at so time, to analyze my market and trade. That helps for flexibility that helps for market moves. And finally, we have market influences. Let's read this short article. Economic data, geopolitical events, central bank policies, and interest rates significantly influence the markets, the forex market. These factors cause currency fluctuations, which traders use to make profits. Did you see that? Market influences. We're talking about economic data, geopolitical events, like for those of you who are aware of what just occurred between Iran and Israel. You will notice that there was a great support from the United States of America to seeing that war does not continue, and that affected the dollar so much. And we knew fundamentally that in the coming week the dollar is going to gain some momentum because it has lost its value so much that it's now below 100. So we knew, oh, that means it's coming for a crash if it keeps going down. So immediately you see that there is a comeback from the war and from the misunderstanding between Iran and Israel. What do you think is going to happen? The US is going to pay more attention to their currency. That on its own is a geopolitical event, and that will help to change what's going on with the dollar and going to give it some value. And with that, those of you trading Euro, USD, GBP, currencies that are, they're directly proportionally traded against the US dollars, you just know that if the dollar is gaining momentum, gaining value, then the other markets will be losing value. That predictions gives you profits, or rather, as it's written here, the fluctuation gives you profits. So you're coming into the trading week and you're looking, okay, when will this dollar value gain start? And you're getting in the market at that time and you're deciding, okay, so I'm going to be selling a certain quantity of my maybe Great Britain pounds against this dollar and see how I'm going to make profit between the fluctuations. That's what it is. So these are the few terms which you're going to come across as you start trading, or as you're trading as a trader, and these are what they mean. In case you don't know about them before, these terms will guide you to understand what we are doing, what we mean when we're referring to the forex and crypto trading market. So I'm going to be continuing on these characteristics as I will be going into the crypto market in our next episode. But from the few things I've said with you on forex, I hope you've been able to learn a lot. So what do? Get on board and begin to practice forex trading. Get on ksctrading.com, subscribe to our membership, free, VIP, whatever it is. You don't have funds to get on our subscription, then get on the free. Okay, start making money with the free knowledge, and with the free knowledge you can start to get in the VIP if need be. Okay, if you want to have one-on-one membership with me, you can get on board. It's as cheap as $200, and I'm going to begin to guide you directly one-on-one on what you can do to succeed in trading. I'm rooting for you to succeed. So this is all we're going to be talking about on this episode of our podcast. So look forward to the next episode as I will take it up from here and give you more details as we'll be discussing the crypto markets. See you in the next episode. Have a great experience in trading. Make sure you succeed in your trading career. See you soon.